Hello, it's Wednesday, June 29th. Dennis Smith with Stratus Financial with your 2-minute market update. You can reach me at 562-243-6912 or at denniscsmith.com. That's Dennis with two N's. Okay, well, I'm not going to do my John Travolta imitation and sing any of the songs from Greece, but Greece is still the word. Today, the parliament went ahead and voted through their austerity measures, and the people still protested in the streets, and stocks like it. And money is still flowing out of bonds and mortgages and into stocks. There's really no reason for this to happen on our economic side. It's all about Greece, and let's show you why. I'm going to pull up a chart here. This is the Dow Jones for the last, what do we have for the last 2 months? And you can see it's been coming down, 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 and then all of a sudden the last several days it's been rallying up. The very thin line that's alongside of it or below it, this is the yield on the 30-year bond. So this is, as you can see, interest rates have been going down as the stock market dropped. Slight spike there. And then here we go, the last several days, the yield has gone higher and higher. And let's bring in our mortgage-backed securities, which are what our mortgages trade on. And you can see for the last 3 months that as the prices of the securities went lower, we've seen our interest rates drop. And they hit a peak here at the beginning of June. We'd had a bit of a correction. They came back up at the end of last week, and then all of a sudden they've plummeted. Let's take a close look at that. Here's the bond prices the last 3 days for mortgages. So we've seen a big sell-off. It is not a good time to be floating your mortgage. It's a good time to lock in. There's really no reason for this to be happening from our economic standpoint. Our economic news is showing that consumer spending was flat in the month of May. Adjusted for inflation, there was almost zero increase in consumer spending. Personal income is in May, after inflation, only went up 0.1%. That's only $1 per thousand. And consumer confidence that came out today, the data on that, it's at its lowest level in 8 months. So all of our interest rate increases are basically because investors are really liking stock prices because Greece's getting its debt situation figured out. Pretty soon we're going to go through the same thing with Italy and with Spain, but in the meantime stock prices are soaring and interest rates are going up. Lock them if you got them. As I always counsel people, we can float down later if rates drop. Please call me if you have any needs, questions, or I can help you with the purchase of your new home or refinancing your existing mortgage. Dennis Smith, Stratus Financial, 562-243-6912. Have a great day.